A certificate of deposit, or a CD, not to be confused with a compact disc, is a type of deposit account offered by banks and credit unions that typically offer a higher interest rate than a traditional savings account. The trade-off, though, is for this higher interest rate, you're agreeing to keep your money in this account for a set period of time, known as the term of the CD. This is perfect for the investor who doesn't need to touch their money for a long period of time, and it could be a really good way to earn a higher interest rate than just having your money sitting in a checkings account. The interest rate is going to be higher than what you would receive in a regular savings account because you're committing to keep your money with the financial institution for a set period of time. Another big perk of CDs is that they are very low risk, almost being risk-free. That's because the government FDIC insurance covers up to $250K per an account holder per institution in case the bank goes bankrupt. But we all know banks operate as a legal Ponzi scheme, so the chances of that happening are pretty low to begin with. So CDs can be a great way to earn money on some spare cash, but there are going to be some trade-offs. For example, the interest rate on CDs, they might not keep up with inflation, meaning the real value of your money, it could decrease over time. CD rates are going to be heavily impacted by the federal funds rate, so when interest rates are low, so will the rates offered by CDs, and most investors will probably just want to invest in stocks or bonds for a higher return when interest rates are low. But when interest rates are high, the interest rate on CDs will also be high. Thus, CDs will become a little bit more attractive to investors as it's a guaranteed way to make profit. If you do need money to your CD before the term is up, though, you will have to pay a penalty. CDs also offer a way to make money that is not in any way connected to the stock market's performance. It's a way to get another stream of income that's diversified and you don't have to worry about what the stock market is doing 24/7. Now, do the rich use CDs? Well, yes, because CDs can be a very low-risk way to earn a guaranteed rate of return on their money, which can be attractive to those who want to preserve their wealth and minimize their risk. So some will choose to allocate a certain percentage of their portfolio toward them. Now, are CDs the best way to get rich? Probably not. With risk and reward, they have an inverse relationship. So the more risk, the greater the reward. The lower the risk, the lower the reward. Now let's take an example of a CD from Discover Bank. Here we can see for a 12-month CD, they are giving a 4.5% interest rate, so a $2,500 deposit will earn $112 in interest with Discover. Now, it's speculated that Uncle Jerome is going to be raising interest rates again because inflation is still nowhere near where we want it to be. So it's possible that CD rates will go up closer to 5% when interest rates get bumped. Again, just know that this is going to be a possible trade-off if you want to lock in your rates today. In different times of the economic cycle, the Fed could lower interest rates, but if we locked in our rates today, we would be locked in at those higher interest rates, so you would actually end up taking advantage of the bank in that scenario. You also want to make sure that there's no hidden fees with these CDs, so here we can see that Discover doesn't charge any hidden fees. Now, it looks like if we put the term of the CD to 18 months, we now get a 4.75% interest rate, but if you go any higher, that interest rate will actually go down. Now, you might be wondering, how could this be possible? You would think the longer you put away your money, the higher the interest rate. But remember, the bank needs to protect itself in case the Fed does cut interest rates. Banks are in the business of making money. They're not in the business of giving you free money. Now, we can go as far out as 10 years from now, which would give us a 4.10% interest rate. Now, nobody knows what the interest rate will be in 10 years from now. Nobody knows what the year 2033 will bring us. It could be higher or less. But the thing is, if we lock in today's rates, we will get a guaranteed 4.10% return for the next 10 years if we lock in that transaction today. It's kind of similar to locking in an interest rate on a mortgage loan. So down here it tells you the penalty of taking out your money early. Less than a year, you could lose up to 3 months of simple interest, and so on and so on. Now you're probably wondering, how is the interest on CDs taxed? Unfortunately, the yield is taxed as interest income, so it's going to be at your ordinary income tax rate. There really doesn't seem to be any tax benefits with certificate of deposits. The good news is that some 401ks and IRAs, they allow for CDs to be purchased in them, so that's a way to defer those taxes. For example, Fidelity offers blended CDs, mixing short and long-term ones at various interest rates that can be used in retirement accounts or taxable accounts. The rates I'm seeing here are close to 5%. You could also use reputable sites like Bankrate or NerdWallet to find the best CD deals out there. This will tell you the minimum deposit needed, which sometimes can be over $2,500, and the interest rates over the time periods. Do make sure wherever you get your CDs, make sure they're FDIC insured, otherwise that risk-free situation, it goes bye-bye. Overall, I think CDs can be a great investment tool. It's really hard to find risk-free assets like this. Just know that money needs to essentially be inaccessible, locked away for a while, otherwise early withdrawal penalties will occur. I personally do think the Fed will raise interest rates even more in the short term, and it's really hard to keep me away from Fidelity's money market funds, which offer slightly lower interest rates, but that money does get compounded monthly, and I can use that money whenever I want with no penalty. However, that interest rate is not locked in. Fidelity can always change their rates tomorrow, and now I have lost that golden goose. So that's the trade-off. You gotta find whatever is best for you. Want to see my full $120,000 portfolio that I was able to reach in my mid-20s? Check out the Patreon link below. Support a small-time YouTuber by hitting that like button, leaving me a comment if you think CDs are ever a buy in your portfolio in the comments below. As always, my videos are always found in podcast form under the Collect Cash podcast name. And say it with me, Ben. Buy, stash, and collect cash.